Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. What a sharp fall in the last couple of minutes, right? And Nifty has fallen. It is down 122 points. We started higher by 90 points. So quite a fall from the highs.
Quite a fall from a high. And like you said, what's actually happened as far as the Bank Nifty is concerned, it actually saw some brief respite from the selling pressure. But once again, every time it came into the green territory, it's gone ahead and seen significant selling pressure. But quite a lot lined up on the show today. And we'll start off with the main headlines. Market slips to the day's lowest point. Key indices lose about 0.5% each. Mid-caps also off highs, but continue to hold up in the green.
Somani Ceramics rallies over 19% on sharp improvement in margins in the fourth quarter, driven by lower gas prices. Profit jumps over 26%, while sales volumes rise 7%.
Apollo Tyres rolls higher in trade after upbeat brokerage commentary a day after the Q4 earnings. Nomura upgrades the stock to a neutral rating, says Q4 numbers were impacted by lower revenues and EPR provisions.
Oberoi Realty sees follow-on buying after reporting good numbers and positive management commentary on the conference call. Motilal Oswal has a neutral rating with a target price of 14.35 rupees a share, while Jefferies maintains hold and says that they expect pre-sales growth of 20% each for FY25 and 26.
Mankind Pharma under pressure despite a good Q4. The management in the conference call says that they evaluate both big and small assets for any potential acquisitions, and the acquisition will be done via a mix of debt and equity.
Okay, all right. Those are the top headlines for the markets. We are 250 points from the highs of the day. It is at the day's low, led by Bank Nifty, which continues to sulk actually. 280 points gone on the Bank Nifty as well. That's the major reason that we're seeing that fall on the Nifty. As Vivek was mentioning earlier, every time it attempted to come back into the green, it did see a follow-on selling. The mid-caps, they are outperforming, of course, but they've come up from the high sharply, closer to the day's low again, 106 points higher on the mid-caps. And we do have a lot of broader market movers on the back of earnings, on the back of news updates as well. So we'll keep tracking that for you, but definitely a lot of nervousness in the market that continues.
That's right. And, very interestingly, yesterday, like we were just discussing some time earlier, SBI has gone ahead and hiked deposit rates. And, that has increased nervousness in the market about tight liquidity conditions. There is belief, especially Jefferies believes that, there could be other banks, especially the mid and small cap names, that could also go ahead and be forced to go ahead and follow the move that SBI has undertaken. But this is our special segment, Mid-Cap Movers. Hormaz is at the wall. He's looked at all the mid-caps. Hormaz, what's on the store?
Well, when it's business as usual, the broader markets are outperforming. But when the broader markets start to come off, you may want to think that there is some bit of jitters on the street right now. As you can see, that the mid-cap index is significantly off the highs. But we'll still start with the gainers regardless, because the gainers are still outnumbering the losers. And the top gainers on the broader markets include Radico Khaitan. It continues to go higher after its results as well. KEC International, PB Fintech after that MSCI inclusion, another day of gains for them, almost 4%. APL Apollo Tubes and Apollo Tyres is off the day's high, but still 2.5% higher. Some significant earnings reactions coming in today's session after results that were reported after market hours yesterday. And Titagarh Rail at the highest point of the day. Morgan Stanley sees further upside in that as well, almost 10% higher there. NCC is up 8.5%. And Somani Ceramics, though, is the stock of the day, possibly 17.5% higher there. And Honeywell Automation opened lower, but then has staged a very sharp recovery, 6.5% higher there as well. PSU banks, as you are highlighting, they are the ones that are the top sectoral losers today. And Canara Bank, after that stock split, is now 5.5% lower. Bank of India and SBI has also fallen to the lowest point of the day as we speak. Some stocks that will come up on the back of volume buzzers, on strong volumes, those are the ones that are gaining. Oberoi Realty is up 8.5%, the top gainer on the Realty Index as well. 3M India, FDC and Hitachi Energy 12.5% higher, past the 12,000 rupee mark on Hitachi Energy. And lastly, some stocks that are bucking the trend can no longer say bucking the trend, because there are lots of laggards as well in today's session. Bandhan Bank now almost 7% lower at the lowest point of the day, ahead of earnings tomorrow. So Mankind Pharma, after the management commentary there on the con call, is down 5%. Apar Industries and Finolex Industries are also some of the other losers today. Back to you.
Okay, all right. Thank you so much, Hormaz, for joining us as always. So those are some movers in the broader markets, but we'll slip into a short break. When we come back, we'll be joined by Pankaj Podar, the Group CEO of Cosmo First, to discuss the quarter gone by. Stay tuned for that. Welcome back. You're still tuned into Mid-Cap Radar. It's a good time to get a technical check on the markets. Let's welcome Jay Thakkar of ICICI Securities for just that. Jay, good afternoon. Thank you so much for joining us in the studios today. You know, there's been a lot of volatility. What are the charts suggesting now? What are the other crucial levels to watch out for?
Good afternoon to you, Sonal and Vivek. I would say that Nifty has sort of formed a range. The range is 21,800 to 22,800, and I believe that this may continue for a while. So the dip which we are seeing today, the correction which we are seeing today, unless this 21,800 levels are held, there is a chance of a bounce back again in markets, and the similar kind of levels for Bank Nifty would be 46,800 on the downside. So there could be a range of 46,800 to say 48,500 out there on Bank Nifty. Both of these indices are likely to trade within a range. If at all there is a breakdown from this range, then it would be a big cut thereafter coming in, because the volatility index is already up above 20 levels or so. We have been seeing that there is a double top kind of formation on Nifty charts as well. But then till those levels are not broken, there would not be a confirmation. The mid-cap select Nifty has seen a good lifetime high today, although it has corrected quite a bit. But then I think the broader markets are doing good. Hence, I have two buy recommendations, one sell recommendation. The buy would be on Astral. It's trading quite positive today. We are seeing some good long build-up as well. The momentum is already bullish. It's trading around the levels of 2250 right now. I expect this stock to inch towards 2350, 2400 levels in the short term. One can buy this, placing a stop loss at 2175. I've got a sell recommendation on Grasim. It's trading around the levels of 2320. It seems to have formed a good bearish head and shoulders pattern, so it's likely to head towards 2200 levels. One can short this with a stop loss of say 2360. And a final recommendation is on Lupin. Now, among the pharma pack, I think this is one stock which is likely to outperform. It's trading around the levels of 1672. It can head towards 1750, 1800 in the short term. One can buy this, placing a stop loss at 1645.
Jay, you spoke about volatility being quite high in Nifty and Bank Nifty. Bank Nifty, which is the resistance that you're seeing at the current level, and same for the Nifty?
See, 48,000 definitely, Vivek. That's the immediate resistance we are seeing. I mean, we saw that in yesterday's weekly expiry session as well, today as well. I mean, it was not able to sustain above those levels. And even if it does, Vivek, then what will happen is, if you see Bank Nifty IVs, they are trading sort of between the range of say 18 to 14 on the downside. And generally, I've seen during this kind of an event, it moves towards 22, 24 levels. So there's still much more room left on the upside. Hence, we can see this volatility continuing, and Bank Nifty would hence face resistance on the higher levels. And moreover, I would say that most of the private sector of the PSU banking stocks are facing good resistance at higher levels. We have seen a good short build-up on most of the banking stocks.
Okay, all right. Thank you so much, Jeff, for joining us. So that is the technical check on the markets. With that, let's move on and focus on Cosmo first. The weakness continued for the company in Q4 on a YY basis. EBITDA margin contracted sharply. However, revenue saw a mild recovery sequentially, and profits also surged on a quarter-on-quarter basis. To discuss this, what's the outlook for the packaging industry and the other verticals of the company, we have Pankaj Poddar, Group CEO of Cosmo First, joining us now. Mr. Poddar, good afternoon. Thank you so much for joining us. Well, there's a sequential recovery in the numbers this time around. You've also mentioned that there is an improvement in BOPP full margins in the month of March, and that could have continued in Q1 as well. How much is that improvement versus the bottom, and do you think these margins have bottomed out now?
We certainly see or expect an improvement in these margins as, quarter on quarter it passes through. Definitely the demand is much more bullish now, and there's no new supply which is going to hit the market in this year. So if you personally ask me, I do see that, the margins should improve in the coming year, though right now what had improved in March has stayed in April and May till now.
Mr. Poddar, would you be able to quantify the kind of improvement that you're expecting in margins, both for Q1 and for the rest of the year? Do you expect to see sequential improvement as well, Q2, Q3?
Yeah, so right now I would say from an EBITDA perspective, it has improved by 1.5%. Though, the margins in the market general are still low. If somebody is operating just a commodity business, then we are talking about hardly 3 to 4% EBITDA levels for commodity business. And for polyester, it is still at a loss level. So even if you see, though, there is an improvement, but these levels are also not too sustainable. And given that demand is much better now, ideally it should ramp up in next couple of quarters.
Okay. So you also indicated specialty margins per kilo witnessed marginal decline in FY24. How much was this decline? What led to this? And can you also give us the sense of that export uneven order that you got? Did it get transferred to FY25? What exactly happened here?
Yes, so in general, what we had seen is that margins were under pressure all across, especially in our semi-specialty category. But the good news is that US is recovering and getting back to earlier levels. Europe has already partially recovered. So what we definitely see is that our export margin should improve, our specialty margin should improve from here.
Okay, and that export order, that when you call it uneven, what does it exactly mean?
So actually, one of our segments last full year was absolutely dry. Partly it was, because I would say that they had overstocked during COVID time, but also given that, our customers were not getting orders for it for recessionary pressures. But what we have seen in Q1 of this year is that segment has also come back. And that should also help us in some improvement in the margins in Q1 of this year.
Okay. So in specialty chemicals, you have master batches, you have adhesives and coating chemicals, out of which you expect master batches and adhesive to reach almost 7 to 8% of revenue separately. That's what you've mentioned. So what is it currently, and how much specialty chemicals are contributing to the overall revenues? Do you see it in the next 3 to 5 years, and will this be margin accretive?
So this year, specialty chemicals should be doing roughly 10% of our group turnover, 7 to 10%, depending on how the film numbers and how the raw material costs are there. And the good thing is that in chemicals, we have got some very good breakthroughs in last couple of quarters. And we do expect that it should make 20% plus ROCE in the coming year. So overall, all the R&D efforts that we had been putting in last 2-3 years have started to pay off now. And there's a very healthy pipeline of products that should also up and hitting the market. So this year, we expect the revenue should be somewhere in the range of specialty chemicals of 225 to 250 crores. And at the same time, the margin should also, the EBITDA margin should start hitting double-digit numbers.
Okay, all right. And this will largely be in the adhesives, coating chemicals and master batches. The overall revenue will be around 250 crore rupees. Okay. Let's talk about your pet care business. What was the monthly GMV this time around? Will you see a better number this year versus last year? And is this the year when you break even and do that demerger that you've spoken about earlier?
So one thing that we have done is we have set up a new legal entity, Ziggly Ventures Private Limited. Obviously, we have not moved the business as yet. We are still looking for the right time. But as we had said that, within 3 to 4 years, we will be moving the business to Ziggly. So if not this year, more than likely next year, we will be putting this in a separate legal entity. As far as the GMV numbers, we have started touching around 4.5 crores. The good thing is that, we are witnessing a same-store sales growth, and our entire focus this year would be to make sure that our same-store sales growth should at least grow 60-70% within this year. And we are also witnessing that with same-store sales growth, our losses numbers have started coming down. Obviously, the other piece, which is the online business, where we are till now we were trying to sell others' products, or we were operating like a marketplace. Now we have started launching our private labels, and therefore it should also start helping us in improving our online margins, where the focus will be more on selling private labels than selling other products where the margins are lesser. So we are seeing quarter-on-quarter growth in revenue numbers, and hopefully the losses should not go up with higher revenue, which was the trend in the past. Ideally, what we should see is a significant growth in revenue numbers again this year. And at the same time, the loss percentage should come down. I don't think so break-even is going to happen in this year or next 1 or 2 years. It is going to take some time unless we achieve a scale of more than 150 to 100 crores. The profit would not be so easy. But the best part is this industry is growing at 18 to 20%. So 3 to 4 years, this industry will become a much larger industry. And we are happy to see that we have entered the industry at the right time.
That's a lot of clarity. Thanks for that. Mr. Podar, net debt currently stands at a little over 560 crore. How do you expect the number to trend over FY25? And any capex plans, or on the other hand, any debt reduction plans?
So this year, we already had a committed capex of roughly 300 to 350 crores, which will happen during the year. This year, it will still hover between 2 to 2.5 debt to EBITDA ratios. But assuming that the market does not change too much, I mean, if market corrects, then obviously this number would look lower. Having said that, we do not have too much of capex next year. I mean, we've hardly committed any large capex for the next year, and therefore we will start seeing a very significant reduction from FY26. But we are sitting at a very good position right now, and obviously in next 12 months we have to start looking at what next beyond this, because right now we have not committed anything for FY26 or FY27.
Okay, all right. So we'll speak to you again when there's some clarity, because the market has been very volatile when it comes to the packaging films industry. But thank you so much, Mr. Podar, for joining us as always and giving us details. So some recovery that has been seen in BOPP film margins, but we'll have to see whether that sustains or not. We'll slip into a short break. When we come back, we'll get you more on the markets and put focus on mid-cap spotlight segment. And we have 2 stocks on our radar, so stay tuned for that.
Welcome back to Midcap Radar. LIC Housing Finance reported a mixed set of Q4 numbers. The company just had its conference call where they appear to have given a strong guidance. Abhishek is here with all the key details.
Well, Vivek, in the con call, the management has highlighted that demand for housing loans remains steady. They are seeing significant improvement in all areas of their operation. There was a technical write-off that they have done with respect to asset quality. So, gross NPA worth about 1,080 crores have been written off in Q4 alone. For the year, they have written off a little more than 2,000 crores. They expect strong financial year 2025. Tax rate would normalize to around 19 to 20%. Going ahead, they expect net interest margin to be in the range of 2.7% to 2.9%. Remember that for FY24, they have seen a net interest margin of about 3.08%. So wage revision provision led to higher OPEX this time around. And for FY25, they expect double-digit growth both in terms of disbursements as well as AUM. Back to you.
Okay, all right. That is about LIC Housing Finance. The stock is higher in trade right now. But let's now talk about Mankind Pharma. Margins and profit have come in better than estimates. This is our mid-cap spotlight segment. Ekta is telling us about the numbers and the conference call takeaways as well. Ekta.
Thanks for that. Well, yes, revenue was up around 19% for the company. It was in line with estimates. Margin better than expectations at 24%. Profit also better than expectations. The domestic revenue was up 10%. Consumer health was up around 2.6% for the entire year. It was sluggish, but Q4 it saw a recovery. Exports stood out because it was up to 30% on a year-on-year basis. On a low base, the company did say there were some one-off opportunities. Board has approved fundraising of 7,500 odd crores. They're planning to increase the investment lending and guarantee limit by 10,500 crores, increasing their borrowing limit to around 12,500 crores. And they have indicated that the interest in BSV, the company says it's speculative. They do look at inorganic opportunities time to time. Now, a couple of important call takeaways. They are not looking at an international acquisition at this point in time. They will ensure debt to equity is within limits. They are open to opportunities of all sizes in the chronic consumer side. Acquisition will have to be via a mix of debt and equity. They will be evaluating both big and small assets. The fundraise is an enabling resolution to be prepared in case of an acquisition. They're looking at opportunities, but currently it is speculative. Base business in the US is growing on a Q-on-Q basis. The stock is down post numbers. That's primarily because it's trading at hefty valuations and it's largely an inline set of numbers. Stock is trading at around 38 times FY25 PE and 34 times FY26.
Thank you so much for that, Ekta, giving us a comprehensive review of Mankind Pharma and also the conference call takeaways. The company would be mulling an inorganic acquisition as well. Well, just some time ago, we had some flashes on your screen that indicated that NBFCs have gone ahead and requested the Finance Ministry to go ahead and get a level playing field as far as the project financing norms are concerned with banks. There are 2 stocks on the radar. Remember, both of these stocks had corrected quite significantly when this news came out. The first one was REC, that is Rural Electrification Corporation, and the other one was PFC. Now, when you're looking at both of these stocks, both of these stocks are active in the session. In fact, both of these stocks are holding in the green. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.